Hey guys, how's your day going? I I wanted to show a little bit about the AIRO indicator with Auvoria Prime. I think even a lot of people that are in Auvoria Prime, they haven't had a good look at AIRO. It keeps getting developed and it's come quite a long way from its original beginnings. So I thought I'd show you that and what I'm doing with it. So I'll just share my screen and jump onto my Auvoria Prime VPS. All of Auvoria Prime's products are accessed through a dedicated VPS that they have. So just I don't want to go into too much about exactly how Auvoria Prime operates or everything, because this video is sort of directed at those that already know. But you have your own broker account. In this case, I'm using Pepperstone. You can pretty much, with AIRO, you can pretty much use any amount of funds that you like. This is only $1,000 account. You can use a lot more, obviously. You could also use a lot less. Using a lot less, you just simply use a smaller lot size when you trade with. I mean, even on a couple $100, you could trade and practice. I think everyone likes to say, when you first start trading, you use a different strategy or a different EA or whatever you're using, you should start on a demo account. And yes, I also agree with that. But once you're successfully proven that strategy on a demo account, don't jump into $1 million account, because your own emotions will get in the way when you start trading real money. So I would say after your demo account phase, jump into a live account, yes, but just only use a small amount of money. Whatever a small amount of money is for you, it doesn't matter. And trade with your actual real money and prove that you can still make that strategy work when it comes to using actual money. And a strategy that I like, just something that I might throw out there for you to think about, is start with whatever you call a small amount. In this case, I'm saying $1,000, and trade for a week, just a week. At the end of, trade every day, at least 5 days for the week. And at the end of that trading, are you ahead? Have you made profit? If you have made profit, then just throw an extra $100 into this account. Not too much more. So we're adding an extra 10% to our account. Why only 10%? Well, because anyone can ask a good week, So just because you have one good week, or that doesn't mean anything. It's good, but I mean, you don't want to go throwing your life savings in just because you've had 1 week that was successful, and then trade the next week. If you're ahead, if you make money the second week, throw another 10% in. Third week, another, you get the idea. Just keep throwing a little bit in there. That way, you're just slowly increasing your balance as you prove that what you're doing is working. Okay, and the longer it's working for you, the more certain you can be that it's working long term. And because we're just slowly increasing our balance, that's a safe way of sort of getting our balance there pretty quickly, but without risking it until we're really sure. That's just a strategy I like. Everyone obviously comes up with their own. But getting on to AIRO and how AIRO works, what we're looking at on the screen now is what we call the AIRO dashboard. If AIRO is one of the products in Auvoria Prime that you've selected, then you're going to have a, let me jump on my Auvoria Prime account, and on your dashboard, if you have a look at so I've got a silver access pass. For me, the silver access pass gives the best value for money that there is. It allows me to select 2 of their products, and I've selected the Market Makers Trend. That's the fully automated EA, and AIRO, which is a great indicator. For my Silver Access Pass, I won't have to pay a monthly fee for my crypto advantage trading, and I won't have to pay the monthly fee for my AP Social, which is the PAMM trading accounts, which I probably will show you them results because they've been fantastic. Likewise with the EA too. But AIRO, sure, AIRO is it's an indicator only. Shows you a lot as we'll go through, but you still need to place your trades manually, manage the trades, close the trades. Although there is a full suite of risk managers, trade managers, and everything to come with it, which I'll try to get into a little bit as well. So probably not for somebody that's never done any trading. Okay, that's just the indicator. But it doesn't take a lot to learn, and I do know people personally, and they are people that are in our group, in this group, and they used AIRO to become successful traders. Like they were somebody that knew a bit about trading, but they'd never done any manual trading, and their sort of stepping stone into manual trading was using AIRO. One person in particular that I'm thinking of, but that housed a number of people for you to work it out who it was. She used AIRO, studied AIRO, did all the training on it, and became very, very successful at using AIRO. Okay, she's not using AIRO now. Why? Because from using AIRO, she learned. She was keen to learn, so she learned from a variety of places. But one of the main things was studying AIRO, studying the strategies for AIRO, and now she is capable of making money without having AIRO on the screen. So am I guess, but I still like to have it there because it's very handy. So we'll go through that. But what I wanted to show was that, so whichever product you've selected, all you need to do, and you'll find this on the dashboard page, is click on the setup course. And here is everything you could possibly want to know about it. Okay, so we've got an overview, which doesn't tell you a lot. Just what it is, it's an overview. Then you've got the setup course, how to actually access your VPS and set that side of things up. Then you got the AIRO setup. And then the AIRO dashboard setup. And then there's two more products that come with it. One's a risk manager and one's a trade manager. I'm not going to get into all of those, but I just wanted to quickly show people how to easily find everything on it and set it all up. So we'll whiz back to my VPS. So what we have, just give me a second, guys. So what we're looking at here is what they call the AIRO dashboard, and it allows you at a quick glance to see what's going on all these different pairs. Now, all of these pairs are just ones I've selected, some personal favourites. I often trade others as well, but at the moment, that's what I have on there. With the AIRO dashboard, you can select which pairs you want to use. You can also select which time frames you want it to monitor. So what the AIRO dashboard does is simply monitor all of these different pairs and all of these different time frames on all of those different pairs, which means it's doing all the hard work, isn't it? Otherwise, manually trading, you have to monitor them yourself, and monitoring all of that, yeah, it's not real feasible. You would be very, very busy in front of a screen all day. Also, you'd have to have all those particular charts open to look at. We don't have any charts open except for the dashboard. Just quickly, you can also set which time frames you look at. I often don't have the daily or the weekly on there, but at the moment I do. You can take them off as well in the dashboard settings. And how to do all that is in the AIRO dashboard video, which I was just looking at before. So I won't go into that because Nathan, who's developed it all, has done a perfect job of making those videos. So what do we got? So at the moment, we've got a green box here, a green one and a red one. That means that there is a potential sell opportunity here on the US 30 on the 4 hour time frame. Okay. Here we have Euro JPY on the 5 minute time frame, a potential buy order. So I'm just going to click on that and it's going to bring up. You can set it so that it automatically puts AIRO onto the screen for you, but I've obviously skipped that. I've just quickly put this together to make this video, but I'll go to my templates and I'll click on AIRO, and that'll put the actual AIRO indicator onto that chart. Now let's just quickly go through what it's showing us. The AIRO indicator shows, in this case, this red box is a resistance zone. Let me just zoom out a little bit. Okay, so I've zoomed right out. You can see when I clicked on that green box, it brought up the correct chart on the correct time frame. So we can see all these green boxes are support zones and the red ones are resistance zones. Nice and simple, nice and clear. That visual is quite handy, I think, even though a lot of people are quite familiar with what support and resistance is. I find this really helps as well. So what else is it showing? You can see with these white arrows, that's when we get an alert. So whenever one of these arrows comes up, there will be an alert, which can be directed to your phone. You'll also get a pop-up box on your MT4 here telling you what the alert is. And really what it is whenever the market crosses this moving average line, it's going to give you an alert. So it doesn't mean at all that you should go and trade. It's saying there is a potential trade opportunity here. And what they have is quite a few different strategies. The favorite probably, and the main one that was the original one, and the only one I'm going to get into on this call, is just called the bag strategy. So what it means is if the market has bounced off support or resistance, and then when it crosses the moving average, you'll get the arrow. So bounce, arrow, go. So BAG, that's what they call it, the bag entry. So it's got to bounce off support or resistance. You've got to get an arrow. And then if there is enough room between the arrow and the next level of support or resistance, you would place a trade. So in this particular instance, I would just want to see what's below here. Okay, so it really hasn't bounced off support and hasn't reached support. So already it's a no trade. But what else we would be looking at is, so obviously it hasn't bounced, but we've got the arrow, but the arrow is already pretty much on resistance, meaning that the market could very well turn around and go down now, simply because it has before. It's bounced off support, resistance there, it's bounced off resistance, and it's there again now. So sure, it could break through and keep going up, but the whole idea of trading is to pick the opportunities that have the highest probability of playing out in your favor. And this one hasn't bounced off resistance, hasn't bounced off support, and the arrow is already right up here in resistance. So we wouldn't actually be taking this trade. Now, if I get some good alerts come through while I'm making this video on this Zoom, then I will place trades and show you. So hopefully that will happen. So the bounce arrow go strategy, it's got to bounce off support or resistance, you get the arrow, and then if you've got a decent bit of room to the next support or resistance, that's your go, and you would place a trade. one more thing you need to keep in mind is to zoom out and have a look. Are we in an uptrend or are we in a downtrend? For those that know nothing about trading, an easy way of telling that is how many green zones are there? So these are support zones. So we've got 4 of them and only 2 resistance. So that is a fair chance that that would mean we are in an uptrend. And the arrow was for an up, so that would be okay if the other factors fell into line as well. Personally, though, having a look at this, it's not a very definite uptrend or downtrend. Okay, so right over here, this is where the market started. The market is pretty much back there again already. So it's come down, it's come up, and now it's just going sideways. So for me, no real clear trend. So, you know, if this resistance zone wasn't here and this had actually come down and bounced off support, the distance up to this red one would be good enough for me, and I would place a trade. What else have we got? Let me just zoom in a little bit more where we were. We also have our trade manager. So I'm going to slip this one across onto the chart and show you the settings for it. What the trade manager will do is it can automatically set a take profit and it can automatically set a take loss. You can just choose them how you like. I like to monitor my trades. And that's why I like the 1 minute and the 5 minute and even the 15-minute timeframes. If I take out a trade on a higher time frame, what that essentially means is it would usually take a lot longer for that trade to play out. So on an hourly time frame, it could take all day to play out. It could take multiple days. So obviously, I'm not going to be monitoring closely that trade the whole time, and that's where the trade manager would come in handy. And in that case, you know, I would probably have a take profit greater than my stop loss. But you just set, for me, I just like it to be on 100 each. That way, as soon as I place a trade, it will instantly put in the take profit and stop loss for me. So that is set. You can choose to have the stop loss hidden or placed. Hidden means that the broker won't know that you've placed stop losses and take profits, which means that the market makers can't use that information to manipulate the market. You know, for someone only trading $1,000, I don't think it matters very much at all. If you're trading prop firms, you need to place the stop losses and take profits for most of them because you need to prove that you have a safe strategy. So for now, I'm just going to place it. Now, we've got 2 different profit locks, which I have both enabled. I'm going to change these to 200s, only so that I can show you how the profit locks work. So this one's enabled. And so what we're going to do is so our take profit is at 200 points. So if it gets to 200 points, it's going to close the trade in profit. With the first profit lock, when it gets to one, and say the stop loss is at 200 also. So, but with the profit locks, when the market gets to 100 points in profit, it's going to move, for me, I'm going to change that. It's going to move the stop loss into 10 points, so only 1 pip of profit. And so what that's essentially doing is once I'm halfway to my take profit, it's going to move the stop loss up above my entry point so that now it's a no risk trade. I can't possibly lose money. And then profit lock 2, let's say when I get to 150 points of profit, it's going to move my stop loss up to 70 points of profit. So it's going to lock in a little bit more profit. It's just a a little more preferable than just having an actual trailing stop loss, because once you set a stop loss, it's going to trail behind closely. And if the market retraces back a bit, it's very easy to tap out and close your stop loss. Sure, you take profit, but this way you're keeping the stop loss as far away as possible from the market and decreasing the chance of it getting tapped out, but also locking in some profit. But then you can also set a trailing stop loss there as well. You can have this set to work on all open orders or only on this current chart. Okay, because I am also liking to trade gold, sometimes crypto, and definitely indices, where the 200 points isn't very much on crypto. It's not very much on indices. It's even less on crypto. So these settings would not suit those particular pairs. So I would set them differently for each pair. And then I just click OK. And we end up with the trade manager up over here. And I'll just quickly show you how that works. So you're going to have placing the trades. You do so just this way and manually. I will just go down to my minimum size trade here and show you how that works. I am actually going to place a sell order just because, I think it's more likely to, even though they've got an arrow there, we've decided that's not a valid trade because it hasn't bounced off support and it is already in the resistance zone. So because it's in the resistance zone, for me, I think there's a good chance that the market would go down. So I'm just going to place a sell order. If you've never placed an order on this account before, I have on this account, but not via this MT4 platform. You will have to go through that process to allow one-click trading. Now I'm going to place a trade by clicking right there. So it's placed my sell order. It's also put my stop loss and my take profit. So you can just leave it like that. You can, as I said before, you can adjust the values here so that you have a much better risk to reward ratio, because both of these being on 200 is just a 1-to-1 risk to reward ratio, meaning you need to win more than 50% of your trades to make profit. And you can just leave them like that and let it play out. We have the profit locks enabled so that for now, so you can see that the stop loss there is at 200. It says 201 there, but that's at 200 points. Once the market gets to there, 100 points, it's going to move the stop loss from there just to here, so it's just in profit. Then it's a no risk trade. Once the market gets down to 150 points, it's down to there, so it almost reaches my stop loss. It's going to move the stop loss into, I think I had it set at 70 points right there. So it will lock in that little bit of profit. So that's how they work. If I hit my stop loss, if you just hover there, it'll tell you that it would be a $2 profit. So on a $1,000 account, that would be a 0.2% profit. Now, normally I would trade a larger lot size. Everybody's risk appetite's different, but at the moment, my stop loss would lose me $2. So that's 0.2% of my account. So that, in my opinion, is quite conservative. You could bump that up to say that you're losing $10, which would be a 1% of your account, and say you'd multiply by 5. So 0.05 lot size with those settings would give me a 1% risk per trade. Another thing you can do, and this, I guess, is if you've got a little bit of trading experience, you would have a look at this and you would probably, you could adjust your take profit and your stop losses based off, market structure. So for me, this is a resistance zone. So I think, fine tune this a little bit and bring it right down to almost on that resistance zone. And the stop loss here, I mean, the take profit, if you thought the market was trending down, it's recently reached right down here. So there is a good chance that the market could go a lot further down than where that take profit was automatically placed. So I've just adjusted them just based off what I see as far as market structure goes. So now what that means is I am risking 165 points to make 446 points. So I don't know, I'm not a mathematician, but so now instead of having a 1-to-1 risk to reward ratio, I'm now looking at a 1 to 2.5 risk to reward ratio, something like that. Meaning that I'll probably only have to win about, 30% of my trades in order to end up in profit. Anyway, I'll just leave that trade running just quickly, see if it'll get into profit, and then we'll close it. But this isn't a trade, just so you know, this isn't a trade I would normally have taken. I just wanted to do that for demonstration purposes only. One, it was going against the AIRO indicator, but I showed you how we disproved that as not a valid trade. All the arrows are and the alerts are is a AIRO indicator saying, hey, we have a potential opportunity here, have a look at it and see if it meets the other criteria as per whatever strategy you're using in order to make a decision and either place a trade or not. So for me personally, when I am trading a small time frame like this and I am able to monitor my trade closely, I would watch it. And if the market came down, came back up a bit, came down again, that'd be like a little mini downtrend. I'd be happy to let it keep going. If it kept trending down, I may decide that the market could be going to go further down. How would I decide that? Based off how the market's moving, if it's trending down. Also, I could bump it up onto a larger time frame and have a look. And, so the market's pretty much sideways. So I couldn't say this is in a downtrend, but, it has reached a high. It's also reached a low. So, I couldn't call this a downtrend. So I probably wouldn't. I would just leave my take profit there. Honestly, I may even move my take profit to there because this has just been a big spike down. There's been no other history of it. There's been a little bit of just the market's just been accumulating there a little bit. So, there's a much better chance the market will reach here than it is of reaching here. So to be safe, that's a much more likely target than down here. That's just basically how I would look at it and monitor it. But if I end up with multiple trades open or I'm busy doing something else and aren't really just staring at the screen, I do have my trade manager here, which is going to lock in profit 1 and then lock in profit 2, which is, managing that trade for me. But anyway, because this isn't a trade I would normally take and because I am currently in profit, I am going to close it. And if we have a little look over here, I just made 40 cents. My shout. I think even though I only took out a little trade and therefore there was really very little risk, I think if you do something like that, or let's say you accidentally place a trade that you didn't mean to, maybe you place a trade much larger than you meant to, even though because of the spread, it will initially be in a bit of loss. And even if before you realize you go into more of a loss, I think it it's usually prudent. You can get lucky, but usually prudent to close that trade straight away and then make sure you do what you meant to do originally. Because what you meant to do originally would be follow your trade plan with the correct lot size based off the analysis you've done with the indicator and with your other trading knowledge. So if you accidentally do something that's not exactly what you meant to do, then get out of it. Take whatever small loss that is before that loss gets big, because that's when you kick yourself. If you let it, you could go, oh, okay, I didn't mean to do that. Let's just wait till it goes into profit and close it. Pretty much what I just did. Don't do that. And then the market goes against you, then, you kick yourself because you had the opportunity to get out for small loss. And yeah, sure, that's a small loss. You've accidentally done the wrong thing. You've made an error. You deserve to take a little loss for that. Don't push your luck and allow that to become a big loss, because then that's you making another error. And then, you take a big loss, you feel bad. It takes a lot more work, a lot more trading to make it back up and then start to get in profit again. All right, so back to my indicator, my dashboard. All right, we'll just have a quick look and see what else we've got going on. Pound USD has an alert on. I'm going to click on that. That will bring up the chart. You can set it to automatically put AIRO onto them. As I said, I haven't yet. And let's have a look. Okay, this one's more interesting. We have recently, let's remember the bag entry, bounce off support or resistance. You get an arrow. Then if you've got enough room, you go for the trade. So straight up here, we have bounced off support. We've got an arrow. Make sure you actually measure it though. So I've only got nine pips, which is 90 points to the next resistance zone. Now, in the bag entry strategy video, they do talk about 20 pips, but I am only here on the 1 minute time frame. So personally, I think 9 pips is enough for a small trade. The only issue is now, because I've been talking and wasn't straight on to this trade, I could have got in here with my arrow. So this arrow, it appeared and the alert popped up when this trade closed. This trade closed here. So I could have got, if I'd have placed the trade straight away, I would have, if I'd have placed the trade straight away when this alert popped up, it would have been there where that line is. Sometimes you can, particularly if the distance up to here isn't a real lot. And even sometimes if you just want to wait for a little bit of a retracement, hopefully get a better position. If you had done that, if you do that, you will get a better entry, meaning you'll get more movement, more profit from that trade. But you do run the risk, like in the case here, that the market just keeps going up and you miss out on an entry altogether. So that's the risk there, but you could have got in there. So if I'd have placed my trade as soon as I got the alert, it would have been here. If I'd have placed it, waited for a retracement, maybe I could have got in here. And, basically I've just, even if I placed it straight away, the most drawdown that I would have seen would have been 15 points, 1.5 pips. And then the market went up to 4.5 pips. I probably wouldn't have closed out. Maybe my first profit lock would have kicked in already. And then I'm not going to place the trade now, because by the time I finished explaining, the market was up here, which, in my opinion, my assessment, the distance from here to this resistance zone was only just enough to think about placing a trade. And then by the time I'd explained that to you, the market had moved up here, which meant the potential profit was less. So I'm not going to place a trade now, but we can keep a little eye on this and see how it would have played out. I will come back to that one in a minute. Let's go back to our dashboard. So we've got an alert here on AUD NZD. You get a lot more alerts on the smaller time frame because the market is relatively moving a lot more. You're getting a lot more candles. So every hour there is one candle on the 1 hour time frame. On the 30-minute time frame, there is 2 candles every hour. On the M15, 4. So that's what I mean by there's a lot more activity here. All right, so the 1 minute on AUD USD, I'm going to click on that one. It's going to bring it up, and because I haven't set this to automatically do it, I will add arrow and we'll have a look. Okay, so it's bounced, we've got an arrow. So when that arrow closed, it was there. So the distance to there is only 65 points. So I don't think that would have been a trade. We missed that one though, because we were talking before, but we've just got another arrow. But the distance now even less to the distance to resistance is even less now. So that wouldn't be a trade I would take. What else we got? Pound yen. I like pound yen. So let's click on that. Make sure we have arrow on here. You should have that set up automatically. It's very easy. So let's have a look historically. We've had it's bounced off support. We've got an arrow. And from when we got that arrow, the market has 280 pips to resistance. So that's, that fits all the criteria that the actual bag entry video strategy tells you about. So you would have placed a trade there. And you would have essentially, gone into 1 pip of drawdown, and then it did just touch resistance, but you would have placed your take profit just before resistance. So you would have ended up taking over 20 pips of profit on that one. So that would have been a very successful trade. This one here, I probably would have taken profit there on this arrow. We get another potential here, but we're not very far from resistance, so we wouldn't have taken it. And likewise on this one, this hasn't been a bounce off support, and we're very close to resistance, so that wouldn't be a trade for me. Having multiple time frames scanned and multiple pairs scanned gives you a lot of opportunities. So you'll get a lot of alerts, a lot of these green and red boxes, which means you don't have to manually go through the process of checking them all out, checking out all of these different pairs, all of these different time frames. You could have this on, 28 or, 30 or 40 different pairs, really, if you wanted more opportunities. And all you need to do is, check it out. Here we go. We had one on gold. And now we've got one on pound CAD, so we'll check that out. Next time I make a video, I'll make sure I'm organised so that's automatic. So this would have been a good one too. We've got the bounce, we've got the arrow, and then that would have been enough distance up to the next one. So this particular one here, this I could have got in here. That's here's another thing to keep in mind. That's fine. So that's 12 pips. So on the 1 minute time frame, that would have been, a potential trade, I think. And as you can see, it did go straight into profit. This one here is getting a little more dicey because you're getting closer to resistance. So, if you decided to trade on this arrow, then you would also probably want to look at the trend strategy that they have, which is when you can get, get in on this trade, add an extra trade to it, but you want to read that strategy as well. But this one's a little more dicey because we're starting to get a little bit closer to resistance. We just saw this little pop-up box come up. So this is showing us that there was just an alert on the pound USD. So we can whiz back to that chart for a look, just to remind ourselves what was going on. But obviously it has bounced. We've got that. Oh, this is the one we're looking at before. So if we had have taken this trade instead of talking, it would have been a winner because the market went right up to almost to resistance, and we would have had our take profit just before resistance. However, that new alert is too close to resistance, so I wouldn't have taken it. So, so that's the first alert we've had on this call that I would have taken if I hadn't been busy talking, and it would have been a winner. But let's not forget that silly trade I took just to show you how to take a trade. We won 40 cents off that. So we also have an alert here on the pound USD, but on the 5-minute time frame. So if I click on that, so we've got pound USD open here on the 1 minute, but because I've clicked on that on the 5-minute, it's opened up the 5-minute chart. But yeah, can you sort of see how? So this is really bounced, and we've got an arrow, but even without measuring it, we can see that resistance is very close. So that wouldn't be a trade. It's just a very, very good indicator to allow you, not allow you, but allow the indicator to constantly scan as many pairs and as many time frames as you like. And also the risk manager, which one did we or didn't have it on? So the trade manager. The risk manager is to help you determine what sort of lot size you should be taking and all of that. I won't get into that today, but this is, in my opinion, quite a very good trade manager, because not only does it automatically place take profits and stop losses, it's got these profit locks and the option for a trailing stop loss as well, if you like. So, everything that, I would like to have in a trade manager, it's in this one, so it's very good. I don't think there was much else I wanted to talk about as far as AIRO goes. So just quickly, I'm just back in my Auvoria Prime account, and I'm on the what we were just looking at before, which was where the trade manager is, and we've got the bag entry that I just talked about. That's the number one strategy, bag strategy. That's the one I was talking about, where it bounces off support and resistance. You get the arrow. If you've got enough room, you go for the trade, BAG. And I did mention the trend strategy. It's, if you're getting multiple arrows in the same direction, how to decide whether you should keep trading or, and that's going to be basically based off where resistance and support are as well. But that's a good strategy you should definitely watch. The Asian breakout strategy. This is only for when the Asian session opens, based off some simple rules. There can be some really good profit on that strategy if it's it's only happens once a day when the Asian session opens. But if everything lines up, there's really good potential profit on that strategy. So another definite one working out. But there's a whole heap of different strategies we use. Breakout strategies, multiple time frame trading strategies. It's just to help you decide if you're actually trading in the overall trend. Counter trend strategy. I don't even think I'll watch that one, so I won't tell you what it is. And we've got wedges, a strategy. I haven't watched this strategy either. That's a new one to me as well. How to use Fibonacci. We're getting a bit technical now, but the way he explains this and using AIRO to help you, that they make it very simple. So there's two parts to the Fibonacci strategy. The market maker method strategy, strangely enough, this is pretty much where the market makers trend EA came from. Bank induction strategy. So we've just got 10 and 11, and we've got another page to it. No. Okay, so you got all of those different strategies. So, and even though all those strategies are designed to facilitate your use of the AIRO indicator, they are all strategies you can just use in every day-to-day manual trading. So, if you've already got an access pass, I would highly recommend you add AIRO to your products and go through and at least watch all of those different strategies, because they will be invaluable learning and strategies to know, no matter what you get up to in your trading journey from here on in, really. Hang on, just before I close out this call, I just want to check back here and see what we've got going on. So we've got a pound yen one came up. So let's have a quick look on this one. Okay, let's check this out. We have bounced off resistance. We've got an arrow and we've got a long way down to support. So I think, without much further ado, that would be a good trade. I'm just going to zoom out and see what's going on. Not a strong trend, but it is definitely trending down. So that ticks that box as well. So I am going to place a trade, and I think it's quite a good setup. So I'm looking at trading 0.05. I don't actually have my trade manager on this one here at the moment, and because I wanted to get in on that, I didn't want to set up the trade manager. But now this will be good too. I'm going to manually place my stop losses and take profits. I always place my stop loss first, because that's the vital one. That's going to protect me from taking too big of a loss. It's going to stop my loss. And you can see with my cursor hovering there, if I hit my stop loss, it will be an $11.29 loss. So 1.1% of my account. And I was aiming for about a 1%, so that's quite good. I've placed a stop loss there because it is just above this low point. I could have placed it higher just to be a bit safer, but if the market comes up above this wick here, then I think it rules out this as not being a good trade, because we want that to be the bounce. That meaning we don't want it to go any higher than that, and we're placing our trade based on the fact that to us means the market's going down. So I'm very happy with this trade. It's followed all of the bag entry requirements. It's bounced. We've got the arrow, and we've got, I didn't measure it, but I could see it was a good run down. It is down to resistance is 35 pips. So that would be a very good profit. So I'm going to put my stop loss in place. My take profit in place, and I'm going to place it there. Why did I place it there? Is because I wanted it above support. And if I've had a look here, the market went further down, but it mostly didn't go below here. And so I'm a little bit above that, just to try and make that a quite a realistic goal. If I placed it here, okay, the market's only crossed that twice just here. The rest of the time it stayed above it. So a less chance of it actually reaching that. So I'm going to leave it there. And that's going to give me a $15 profit if I win. So $11 loss, $15 win. So, that's like a 1 to 1.4 risk to reward ratio. So that's a positive risk to reward ratio. So that's cool. I would like to have my trade manager on. I won't worry about it right now, but I would, if I wasn't going to closely monitor this trade, I would put the trade manager on so that I could have a profit lock 1 and a profit lock 2 to look after the trade. But anyway, guys, I'm going to wrap up this video here for the moment. Probably should wait and see how my trade plays out a little bit for you guys. I'll put my trade manager on before I close the video out. So profit lock. So this was a 300 point take profit. So I'm going to go with about half of that, 150, and get it to lock in 10 pips of 20 pips of profit. Each pair, each, like on pound yen, a 200 pip movement, a 200 point movement isn't very much, but on Euro USD, a 200 pip movement is a reasonable amount of more movement. So I think each pair really does require slightly different settings. So if I get into 100, if I get halfway to my take profit, it's going to lock in some profit, and my profit lock 2. Let's just whack it in at 220 pips, and it can lock in 70 pips. And I just want that on this chart only so that it doesn't affect any others, which is particularly important if I happen to have indices or crypto open as well. Okay, so that's set there now. Trade manager will look after me, make it a no risk trade. If I get halfway to take profit, it'll lock in some more once I get a bit closer. And other than that, so I was happy with it. Even if this trade goes up here and I lose it, it's not going to worry me, because this was a trade that I was happy to take because it did fit the rules. Now, if you're not using AIRO, if you just got a manual trading going on, you should still have some rules that those boxes need to be ticked before you place a trade. And using AIRO, and this was a bag entry, it bounced off resistance. I got the arrow, so this arrow popped up when this candle closed, which was here. So, we pretty much got in right at the right when the arrow popped up. And the distance down to support was more than 20 pips. So it ticked all 3 of those boxes, 4 boxes, because we are in a downtrend. When we zoomed out, it's in a downtrend. Not a real steep downtrend, but still a downtrend. So I'm going to say that box is ticked. So I might win, I might lose, I don't know. But because it has ticked all my boxes, then that's a good trade. If I lose, well, I prefer it to win, of course, but if I lose, that's still a good trade because I followed my rules, I ticked the boxes, I placed a trade, I'm happy with that. And if you lose, well, that's what happens. It doesn't matter how many boxes you tick or how good you get at trading, you're going to lose some trades. It's just, as I said before, it's a matter of picking the trades that have the highest probability of winning. So like I got a buy alert here, a buy opportunity here. If I had have taken this trade, then that would have had a low probability of winning. I would have went into a little tiny bit of profit, and maybe I could have snuck in and take a tiny profit here. But because it's so close to resistance, I probably wouldn't have taken profit because I would have been wanting to get more. So low probability of winning because it's too close to resistance where the market's likely going to bounce down, which it did do. But see, as the market was moving up here, when the market was here on this candle, this didn't look like it didn't really look like the trade was playing out in your favour. But don't worry about that. Don't go closing it out because it looks like it's going bad, because your stop loss is at the point that renders that trade invalid because it's gone above resistance. Okay, and if you had have closed it out there because it looked like it was going wrong, as soon as you had to close it, the market would have then went in your favour and you would have been kicking your backside for doing so. So for me, this is now, like as I said, it wasn't particularly looking good here, but you have to let the trade play out. So you've done your analysis, it ticked the boxes, so you place a trade. You have your stop loss and your take profit where they belong based off market structure. I have a trade manager set there to lock in profit. So there is really nothing else that you should do with this. If you allow the fact that the trade's going the wrong way to make you panic and close it, then you're not following the rules anymore and you deserve to lose. Simple as that. So we need to let it play out. And for me, just looking at this now, the market's come down, formed a low point, formed a high point. This high point is lower than this high point, so this is a downtrend. This low is a lower low, so it's still in a downtrend. This high is still lower than this one, so that's a lower high, so still in a downtrend. So we're zigging and zagging, but we're going down. So at the moment, this is looking good. We're looking for the market to keep going down lower than this to form a new lower low, but really that's neither here nor there. And monitoring a trade too closely is sometimes counterproductive because you go, oh no, trade's going bad, and sometimes you do panic and you close it out. If the market getting to here may cause you to panic and close it out, I would say that your lot size is too large and you're going, oh no, I'm in too much drawdown. I can't afford to lose that much. I definitely can't afford to lose that much, so I better close it out. Your stop loss should never be more than you're comfortable losing. And in this case, it's just a smidge over 1% of my account balance, and that should be fine. That means I would have to lose almost 100 trades in a row to blow my whole account. Okay, and that's not going to happen. Don't think it'd be possible. You couldn't lose 100 in a row if you tried. That'd be like trying to win 100 in a row. You're not going to do that either. But anyway, so it's trending down. Feeling quite confident on this trade at the moment, the way that's looking. Yeah, it's just formed a new, gone lower than that wick. So that's a new lower low. So that's still trending down. So that's looking good. Just going to measure. Okay, so that's 150 pips where my cursor is. That's where the market needs to get to. And then my first profit lock will kick in. And then it's a no risk trade. If it retraces back up and hits my stop loss, I'm only going to take 1 pip of profit. So it's not going to be enough to be worthwhile. But, it's made it a no risk trade. And then if the market gets down to here, it'll lock in 7 pips, which, isn't a lot, but it's still profit. And hopefully it goes all the way down to here. And that would be a 1.5% profit on my account. If you can make 1.5% profit on your account every day, it's going to compound extremely fast. So this one trade setup, if it plays out, that's it. That's the day done, really. Sure, I like trading and I'll probably trade more, but 1.5% for the day is enough. So if you can just smack out one trade like this every day, take the rest of the day off. It's like, I think trading, you can definitely overtrade. So if you trade from, multiple hours every day, 5 or 6 hours a day, and you're over trading. You shouldn't have to trade that much to make worthwhile profit. It gets very addictive because you can essentially, at least theoretically, you can sit down, open up a chart, and make money at any time of the day or night. So it gets very addictive to keep want to make more, want to make more, want to make more. Now I think you can see that that's human greed kicking in. And if you're over trading, you get tired, you start to have a good run, you get cocky, you make poor decisions, you're not checking all the boxes and following the plan. Plus, you don't have time freedom, so you shouldn't do it. Have a goal. That goal, I don't know, I was talking before about making a 5% profit for the week. So one trade a day, 1% a day, that would be enough. Knock off. Just to try and bring that into perspective, because as I said, it's addictive making money. So it's easy to get into the trap of overtrading. Imagine if you're working a 9-to-5 job and, had to go and work 9 to 5, 5 days a week, and then you got your paycheck at the end of the week. Let's say that paycheck was $1,000. You get that Friday afternoon when you knock off, and you don't think much about that. You go and you do the hours, you get paid. That's fine. So we've just got another alert on pound yen. So this would sort of follow the trend strategy. But so, that because it's now saying, there's a good chance that the market's going down here, that gives you, like we traded this arrow, but now we're getting another down arrow. That makes you feel confident actually, because indicator's saying it's still going down, which is what we want. But what I was saying before was, you work 5 days a week, you get your $1,000 check at the end of the week. That's fine. That's what we're used to. We don't have a problem with it. But imagine if Monday lunchtime your boss said, "Here's your paycheck. Don't bother. You've been doing really well. You've done so much work this morning. Here's your $1,000. Take the rest of the week off." You're not going to argue about that. You're going to take that check. And you're going to take the rest of the week off. Try and have a similar attitude to trading. If you've met your goals, knock off. You've got your week's pay, take the week off. Avoid greed, avoid overtrading. Anyway, guys, I'm going to finish the video off. I'm pretty confident that this is going to play out in my favor. So, I didn't want to leave the video with it going the wrong way. I wanted to end it on a positive note. It could still take quite a while to get down to my take profit, so I'm not going to hang around that long. But for the moment, it's looking good. I'll leave it to you. And I know I'm doing a few different things with trading, but just quickly before I do go, so I've just been talking about AIRO. Remember how I said with Auvoria Prime, if you've got a silver access pass, it's extremely good value because you get 2 products. One of mine is AIRO, one of my products. Okay, so for $230 a month, I'm getting 2 products and the VPS. Okay, so we're on the VPS. This is one product that, I've made profit on while we've been on this call. My other product is, it doesn't matter. My other product is this one, which is the Market Makers Trend EA, which is based off one of the AIRO strategies. This is an account I've had running for 1.5 weeks. It was a $10,000 account. It's now up 3,800. So it's up 38% in a week and a half. I am running it. I'm not going to get into this but I am running it on the highest risk setting, which is 2% risk per trade. So just be aware, there's been great results. I am on the highest risk setting though. But I do have this account linked up to my FX book as well. And I think I think it was 3.9% has been my biggest drawdown so far in this week and a half. So far this week, so I had $12,000 in here at the start of this week. So this last week, which is 2.5 days, this software, fully automated software, set it, forget it really, has made me $1,800, which is what it would have been, $1,200, which is about 15% profit in 2.5 days. So this isn't the norm. Last week was an awesome week. This week so far is incredible as well. This software, like pretty much every software I've used, it does have its ups and it does have its downs. It does have days and weeks where you lose. It does have these different protectors to, like this one specifically, it won't let me lose more than 4% a day. It also won't let me make more than 6% a day. But you can see that's a 1 to 1.5 risk to reward ratio per day, which is the same for the week. It won't let me lose more than 16% a week, but it won't let me make more than 24% a week. So if I made 24% on Monday, this software is going to stop trading for the week. You know, it's getting my paycheck Monday lunchtime and saying, take the rest of the week off. That's exactly what this software does. But, if I had 1 week where I lost 16%, so 1 week where I hit my equity protection and 1 week where I hit my profit protection, I'd lose 16% and then I'd make 24%. So I would still be 8% up. So 2 weeks, a really, really bad week and a really, really good week, I'd still be 8% up overall. So the risk to reward ratios on this are very helpful as well. So with my silver subscription of Auvoria Prime, I get the VPS that I'm on. I get the AIRO indicator, which we just made some profit on. We get the Market Makers Trend EA, this fully automated EA, which, as I said, these 2 weeks since I started this account have been incredible. Aren't always that good, but you get a couple of weeks like this, like so I'm 38% up after a week and a half. So, I'm definitely well and truly ahead, and I can handle a couple of bad weeks now and still be in front. So VPS, AIRO, Market Makers Trend EA. I also have access to, I get Crypto Advantage, which is a crypto trading platform, which would normally be $75 a month. I get that included in the Silver Access Pass. That one's going good. And a lot of people are excited about it. It's not huge profit. I've only been averaging sort of maybe about 5% per month on that. The other one that I've got going is this one. It's just my AP Social, which is set up a lot like Crypto Advantage, in that it would normally cost you $75 a month, but if you have the Silver Access Pass, you don't have to pay the $75 a month either. And so from here, this is PAMM trading. I won't get into what PAMM trading is, but it's a managed trading account. Somebody else is managing it. So all I've had to do is put my money in there and do it. I'll just have a quick look at the summary on this. This is the second week of this one as well. And I've currently, my net profit, so I'm in $34 a drawdown at the moment, but my net profit has been $295. Let me think. I put $1,000 in at the start of last week. I made $165. And then I added a little bit more money as well. So I made 16% profit last week. but they will take 15% of that. So I would have cleared 14% profit last week. Let me just see. I'm 295 up now, minus what I made last week. So that means I've made $130 this week. I did start with a $1,300 balance this week, though, so that's 10%. In 2.5 days, I've made 10% on this AP social PAMM trading as well, which I guess will be about 8% after they take their share for doing the management. But either way, last week I would have cleared $1,400. This week I've already cleared 8%. Sorry, I would have cleared 14% last week. They haven't taken their cut yet, though. And this week, I would have cleared 8%, or not even half a week. So, that this AP social PAM trading. Admittedly, it's only on my second week, so who knows what it's going to average out over time. But it's blown away all of my expectations. I was honestly thinking if I can make 2 or 3% per week on average, that would be okay. And I'm averaging, as I said, 14% and now 8%. So it's been far exceeding my expectations. And this one's suitable for anybody, really. You don't have to have you need zero trading experience. You need to open up a broker account with NBFX and put some funds in it and all that. But if anybody needs hand doing that, I'm sure there's somebody around. Like I can help out anybody as well. But if somebody else is introducing you to Auvoria Prime, then they can help you set it up as well. If not, ask me for help. And Auvoria Prime do also offer a setup. So I know for their EAs, it costs you about $50, and they'll jump on Zoom with you and help you set it up. Not 100% sure if they offer that same service for setting up AP Social, but they probably do. I'll have to look into that as well. So if your sponsor can't or won't help you, and I can't or won't help you, but I will, you can just pay $50 and get Auvoria Prime to do it. All right, guys, that's it. Hang on. How's that trade of mine going? It's just hovering there in profit still, but all right. Okay, so here is something interesting. This support zone wasn't here before. Okay, it's just because the market's come down here and bounced sort of in the same position as here and come back up. So it's decided there is some support here. I wouldn't call it strong support by any means. This is more of an accumulation zone than actual support. And this is just on its way down. So I'm not too worried. I don't think this is very strong support, but I would keep a closer eye on this now. If it goes up higher than this mark here, I don't want to panic and move my stop loss or close it out, but I would keep an eye on it. If the market starts to trend up a little bit, I may close this trade out in a small loss, because remember when I took this trade out, we had 35 pips to support. Now they're saying there's a little bit of support here, although I don't think it's strong support. So I'm going to give it time to see how it plays out. But that's just something to keep an eye on. Sometimes new support will pop up as market structure happens, and don't let that panic you or startle you, but maybe start to factor that into, have a little bit more of a think and a look at what's going on. All right, guys. Another thing is, like at the moment, I'm just in a slight loss here. If I was going to say, if I was in profit, maybe I'd close it because of support here. But if I'm in profit, then it's still looking like going down. Honestly, I don't think I'm going to touch anything just because that support's popped up. I don't think it's strong support. And we've got resistance here. We'd have to break through resistance to get to my stop loss. So I think I'm just thinking out loud here, basically, guys, but I don't think I'm going to touch or change anything. I'm just going to let it play out, which, if you remember earlier, I said is what you should do. Anyway, guys, I'm I am going to leave it to you now. I'm going to turn off this recording and close this Zoom call. But have a great day. And if you've got any questions about anything Auvoria Prime or just anything trading in general, I don't mind chatting about such things. So speak up. Have a good one.